And welcome to the ETF Edge portion of Halftime Report. I'm Bob Pisani. The chaos in Ukraine continues, but so does the chaos in the trading community. Where are the inflows and outflows in the ETF land? Joining me now, Andrew McOrmond, here on set, Managing Director at WallachBeth Capital. Andrew, your specialty is execution of large blocks of ETFs for insurance companies, pension funds. How are your clients managing all these risks right now? And what are you telling them about Ukraine and what to do about the inflation issue?
Let's answer all those. They're trading, so we see that. Pensions have global equity that they have to have, right? Insurance companies, due to their nature, have to de-risk, so they've been selling. Even our tactical asset managers have gone risk off, and they're staying more patient with their risk off. That goes to the second part of your question, the war, right? So it's obviously playing out longer than anybody had hoped. It's a humanitarian crisis. We don't know where the end is to that, so that's going to continue the risk off. And then the inflation part's pretty easy. 40-year high. I was just at a conference with JP Morgan Asset Management. It's 2/3 supply chain, according to them, 1/3 gas, wages, housing, all staying up, right? How do you do that? So how do we tell our people to trade for that? Commodities, gold, hard assets. PDBC is the Power Shares Commodity ETF, doesn't issue a K1. That's what we've been seeing.
So we were watching Kevin O'Leary. He likes China stocks, and you were shaking your head back and forth.
We do not.
What kind of allocation do, for example, the insurance companies have, pension funds have overseas, and specifically to China? And what are you telling them to do about it?
Well, they're certainly going lower, and it's for reasons. I mean, obviously, a retail person or someone like Kevin who's just an investor can take his shots. But let's think three direct things that are wrong with China. Number one, the growth out of China is usually tech heavy. We can see from our own NASDAQ. That's not the space to be in right now. Number two, and this is tricky, you can't say with certainty that they are not part of the cancel culture of Russia. We don't know, right? Even if it's a small percentage that they may say something or do something of support, that carries a tremendous amount of risk. And unfortunately, you have COVID over there, Bob, and now they're going to do lockdowns. Lockdowns aren't good for the economy. So it's not my firm's opinion, but my opinion would be to avoid China.
So you're advising the pension funds stay away?
Well, the firm can't, but I do. Yeah.
We'll talk about that a little bit more. So we've got a lot more to come on ETF Edge, 1 o'clock Eastern Time. How are retail traders who invest in ETFs navigating the treacherous trading environment? Andrew will be joined by Charles Rotput. He's the vice president of the American Association of Individual Investors, and Arnie Nowak. He's the head of Systematic Investment Solutions for Americas for DWS. That's ETFEdge.cnbc.com. Halftime back right after this.